Short sellers in Tesla stock have lost about $3.6 billion in the last 4 trading days alone. The dollar amount that is currently sold short in Tesla is hitting brand new highs of almost $28 billion. For context, this is more than the total amount of shares that Elon sold that dropped the stock to the lows. This is double the amount of shares that retail investors bought in 2022. This could be a big problem for the shorts after earnings. This could be to our benefit as holders of Tesla stock. Now, all of this comes down to earnings tomorrow, and I want to give you the latest analyst estimates for earnings, my expectations, and what I expect Tesla stock to do after earnings. On top of that, we again have a lot of news coming out for Tesla. As you've seen yesterday, Tesla got a big payday, as well as they hit the ABS market to raise $1 billion. This means don't expect any dilution anytime soon. But on top of that, Tesla just secured an over $400 million mega pack deal. This could bring energy storage into a bigger light heading into Tesla's earnings and obviously after Tesla's earnings. Cathie Woods sold more stock, and this tends to be very bullish for Tesla. As you are seeing today, Tesla stock is up about 1%, breaking well above that 290 level. Let's go ahead and get into everything you need to know. Ladies and gentlemen, if this is your first time to the channel and you like Tesla stock and you're bullish or you're bearish and you want to stay up to date with everything happening every single day, as well as the broad markets, and boy, we have some things to talk about as well today, well, hit that subscribe button as well as the like button, and now let's go ahead and get straight into it. The first bit of news is one that you should be weary of. It says leaked Tesla documents expose Cybertruck's extensive delays and serious struggles with powertrain, braking, suspension, and other basics. This is old news. We just had the first one roll off of the assembly line, presumably a Cybertruck that is fit for delivery. This is old news. It's trying to be spread again in a bearish light, and whoever's making it probably wants Tesla stock to not react well. This does not seem to be relevant information at this point. Now, I think it's important to note from this article, Tesla's Cybertruck has 1.6 million pre-orders. But even with an impressive number like that, over 8 times the pre-orders as the Ford F-150 Lightning has, 8 times the amount, well, Morgan Stanley remains skeptical, viewing the Cybertruck as a niche product that may struggle to compete with mainstream pickup trucks. If you have watched this channel here for a while now, a couple of weeks at least, you know that in my personal life, and I live in Michigan, so like Ford and GMs are everywhere, I have been approached by people to ask me if I knew about the Cybertruck, if I've seen this vehicle, because it's so unique. And then obviously during those discussions, it's only happened twice, I'm like, do you like the side? Do you like it or do you hate it? They're like, I don't know. Like, a lot of people don't know if they like it or hate it, but they lean towards liking it because it's so unique. And obviously that's from these two individuals that I've talked to about it. It's the first time they've really gotten exposed to Tesla. Tesla is not in my area, at least yet. You're starting to see more of them, but the Cybertruck is going to be a good way to push Tesla into other markets. And not even if just people buy a Cybertruck, they're going to go and get interested in the Tesla brand. Maybe if it's not a Cybertruck, they go ahead and purchase a Model 3 and a Model Y. Say Tesla to the moon.
Tesla to the moon.
Good job. The second bit of news today, which is very bullish for energy and storage, it says Tesla secures $413 million contract for Megapack energy storage facility. in Massachusetts. The two facilities are named Cranberry Point Energy Storage and the Medway Grid. The decision will enable the state to achieve 80% of its 1 gigawatt hour energy storage deployment target set for 2025. This deal is massive. Tesla's energy and storage is likely to just accelerate throughout this entire year. This is one deal that's public. Imagine the ones that are done that are not getting the same amount of attention as the Massachusetts deal. We could expect some pretty big things, and I don't think your bearish analysts out there are expecting energy and storage to really accelerate as much as it potentially could. Also in the news, Cybertruck rally triggers Cathie Wood stock dump ahead of Q2 earnings. Cathie Wood sold 45,000 shares of Tesla on Monday for around $13.21 million. This is when Tesla stock was at a price of $290 per share. You and I, we know why she's selling stock. It's becoming a larger and larger and larger portion of her portfolio, and she likes to stay around 10% allocated. So if Tesla falls, she buys. If Tesla rallies, she sells. It's pretty simple. When Tesla is still around 11.5% of her main fund, well, she has some more selling to do. Now, a lot of you guys also know when Cathie Wood sells, it means usually Tesla goes higher. That's the historical correlation that we have seen for years now. And we've seen a lot of selling recently with Cathie, and Tesla has just continued higher and higher. And I think that's going to be the same story after earnings. Wall Street is expecting Tesla to report top-line revenue of $24.56 billion and adjusted EPS of 82 cents. That revenue figure would represent a slight gain from Q1, but a massive 45% jump from a year ago. Now, my estimates for top line revenue about 24.8 billion, and my EPS estimates are a lot higher than analyst estimates, around 92 cents. I think in between 90 cents and 95 cents is not going to be a big shocker to me. If you're closer to $1 or even slightly above $1, that's going to be a huge shocker to everyone. Now, if you're in the 70-cent range, well, that could be a big problem. But I will tell you right now, it does not matter what these numbers come in as. This is like 5% of the story of if Tesla goes higher after earnings or not. The main thing that's going to be important is margins, obviously, but not current margins. Where does Tesla see their margins going next quarter and throughout the rest of this year in 2024? AKA, do we expect price cuts, continued price cuts, better way to put it. Also, what's the guidance look like? Does Tesla keep their 1.8 million delivery guidance number, or do they raise that closer to 2 million? That's what a lot of people are expecting, and that's kind of what you need to see happen right now. To some degree. Some people have started to expect around 2 million vehicles will be delivered. Thirdly, and probably most importantly, the Cybertruck and upcoming announcements related to that. Keep in mind what we said previously. There's 1.6 million pre-orders. This is money in the bank once they start delivering these vehicles. Now, we don't know any final pricing on these vehicles. We don't know. Obviously, people can cancel these vehicles, but odds are there's going to be a lot of people that are still waiting for the Cybertrucks, regardless if the price goes up or down. So these are things that we want to hear clarity on. Anything else could just be icing on the cake. Now, for margins, Wall Street is expecting around 17% auto gross margins. I think this number could be closer to 19%. High 18% range, that would be enough to send the stock up probably 10% or more. Anything under 17.5%, and it's probably not good enough, and you probably get a sell-off. What I think is also a decent probability is that auto gross margins could come in over 20% or right around 20%. Now, in Q1 of 2023, Tesla had 19% auto gross margins. Q4 was 24% auto gross margins. Now, the only way this happens if Tesla became a lot more efficient and some of their mineral cost went down. Ford claims their mineral costs have just come down a lot, and that's why they cut prices on their F-150 Lightning. If that happened with Tesla as well, that could mean probably some better margins, right? This would be so far off of analyst expectations that I would expect the stock potentially even to hit all-time highs if your auto gross margins come in higher than 20%. Because you would see such a rush into Tesla, it would be absolutely insane. Now, Dan Ives, even very bullish Dan Ives, expects a move back towards 20% auto gross margins heading into 2024. I think this is a possibility this quarter because your Shanghai employees just got record high bonuses. I don't think if Tesla was having margin problems and margins were getting worse from here, we would be seeing bonuses, record high bonuses, getting paid to Shanghai employees. In Q1, you had 19% auto gross margins. Well, their bonuses were cut down to almost nothing off 19% auto gross margins. If we were really to expect 17 or 17.5% auto gross margins this time around, I doubt Tesla would be paying out these record bonuses. Maybe they did. Maybe Tesla just felt generous. But I think that's a very strong sign of a lot better than expected margins to come. That's why I currently have a massive potential trade on Tesla stock heading into earnings. If you guys want to see all of my trades, every trade I make on Tesla, or come talk to me and discuss some of these trading ideas or what's happening in the markets or what's going on with Tesla every single day, 24/7, 7 days a week, well, link down below in the description of this video to sign up for the trading community. Tesla stock today is not only holding the 290 level, you're breaking above the 295 level as I am recording this video. This is a new high of this cycle, and notice how the low of the day today bounced right off of this longer term downtrending line. This is a very strong sign that higher prices are to come. And it wouldn't surprise me if a short squeeze is also to come that could send Tesla stock over 350, potentially all-time highs. Obviously, it depends how earnings come out, but where you're currently sitting right now is not an ideal situation for the short sellers. The dollar amount that's currently sold short in Tesla is $27.67 billion. This is by far a new high of this cycle, and by far the highest level that we have been at in the last 18 months. 18 months ago, the dollar amount sold short in Tesla was $22.78 billion. Again, today it's almost $28 billion. In the past 4 trading days, short sellers have lost $3.3 billion, not including today, which is probably going to add another 400 or 500 million to this number. So in just the last couple of days, short sellers have been losing their asses. And this move higher has mainly been fueled by organic buying, as well as option hedging from the market makers. As you can see from the option chain, when we blow this up to make it in bubble form, well, that 290 call is seeing volume of almost 60,000 today alone. These options expire on Friday. So all along the chain, whether it's the 295, 290, $300 call, the 350 call, you are seeing massive amounts of activity. Most notably, that $300 call today, seeing 78,000 for volume. This sets us up for an even further possible gamma squeeze. Now, shorts covering. A lot of people are skeptical whether shorts will actually cover or not. And it comes down to the loss that they are seeing. If Tesla really rallies, call it above 310, 320, 330 coming on earnings, shorts are going to have no choice but to cover on their short positions. The losses that they are taking is over $100 million every dollar Tesla goes higher from here. So if you're talking a $20, $30, $40 move, that's going to cause a $3 to $4 billion loss in a single day. And that's alongside my expectations. I expect Tesla will report better than expected earnings, top and bottom line. That instantly changes the valuation calculation. And let me tell you, Tesla is nowhere close to being the most overvalued stock on the market. We'll look at some examples here in just a moment. So Tesla has room to run as far as valuation is concerned. And if people start to get more optimistic about Tesla's margins, well, 350 is what I'm betting on, and 350 is what I expect to happen. Now, all-time highs could happen if this short squeeze kicks into full steam ahead. If shorts start to rush out of short positions, well, all-time highs could be a realistic possibility. Again, let me point out, $28 billion is more than what Elon sold, and take that to comparison of how that affected Tesla negatively. It dropped the stock from over $200 per share to $100 per share. This is over double the amount that retail bought in 2022. It's a massive number. So yeah, when people ask, can Tesla squeeze with a 3.5% short interest of free float? When it's $28 billion that's short, of course. And it's this high because Tesla has continued to go higher. Tesla, as far as the technicals and what we're seeing with the RSI, it's now in overbought territory again at 73.15. But compared to where we were at previously, around 90 on the RSI, you could rally exponentially from here before this would be a cause for concern. The MACD has been in very positive territory overall. You can see every time we hump like this, that's positive, right? You're literally positive on the MACD. You're not negative like if you were under this middle line. Well, short term, the yellow line has now broke above the blue line, which is positive, again, in the short term, which usually leads to even more upside. Not to mention this long-term downtrending line that we have now broke above and have closed above the last 2 trading days and also held that as support the last 2 trading days. This is also indicative of higher prices to come. Now, if some of you guys are caught up on what I just said about valuation has room to expand, well, Tesla is trading cheaper than a lot of stocks. Take Lucid for an example. Lucid trades at 17 times estimated 2023 sales. Tesla trades for 9 times 2023 sales. Lucid is twice as expensive as Tesla if you value it on this metric. What about Nvidia? Nvidia is 27 times 2023 sales. Again, Tesla is 9. Nvidia is more than 3 times as expensive as Tesla. Now, if EPS beats the way that I expect it will and come in that mid 90-cent range, that instantly lowers the PE ratio. So not only on a price to sales ratio is Tesla, it's not cheap, but it's not the most expensive stock out there. Not even close. Well, the PE ratio falls. So that also becomes cheaper. Analysts will ultimately need to raise estimates for 2024, which will make forward-looking PEs even cheaper. So theoretically, you could see the same valuation as we see today with Tesla's share price at 330 or even 350 if the EPS comes in better than expectations. So instantly lowering Tesla's valuation if you are someone that has the valuation concerns that some other analysts clearly have on Tesla. So when we factor all of these things together that we're currently seeing on Tesla, if Tesla comes in with better margins than expectations, gives us good guidance and good commentary as I expect they will, Tesla stock is going higher and short sellers will have to start covering on short positions. You're likely to see a gamma squeeze as well. I'm personally betting on $350 or higher following a couple of weeks after Tesla's earnings. Again, if you want to see that trade, link down below in the description of this video. I have a max risk of like $800 now. It was $400. The trade's up over 100%, and it can pay out $20,000 if Tesla is above $350 a couple of weeks following earnings. Now, it's not just Tesla. You gotta stay up to date with what's happening in the broader markets as well, because if the markets go through a temper tantrum like phase and stocks start to fall and sell off, well, Tesla's not immune to that. At the same time, if things get more optimistic for a soft landing, inflation continues to come down, the economy continues to do well, that could also help out Tesla quite a bit and help support the valuations that we are seeing now and the valuations that we are likely to see to come after Tesla's stock, presumably, in my opinion, again, rallies after earnings. Retail sales came out this morning at 8:30 in the morning at 0.2%. It wasn't negative. It wasn't too bad. It's still in positive territory. It's 2.4% annualized, although we were expecting a 0.5%. So it missed expectations by over 100%, but it wasn't too bad where markets had to sell off. The next biggest problem that we could have is earnings for big tech, which are going to really start coming out next week with Amazon, Google, Microsoft, your trillion-plus-dollar companies. If those earnings do not live up to expectations, well, that could be a problem. So that's going to do it for this video. That is everything you guys need to know happening in the broader markets as well as with Tesla stock today and what to watch for coming tomorrow with Tesla's earnings. I'm trying to work it out, but it looks like we're probably going to be live for Tesla's earnings as well. If you made it to the end of this video, hit that like button and subscribe to the channel. Check out the links down below in the description of this video on your way out. Might be some things down there you guys like. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.